Hello again. Name's Jim Wade. I am a tax attorney here in Maine, and I help people resolve their IRS problems once and for all. And in this series of blog posts, we're going to be talking about IRS tax liens. We talked the last 2 weeks about tax levies, where the IRS seizes your assets. A tax lien is a little bit different. Think of tax liens like a mortgage. It is a claim against your property versus an asset seizure. But there is a great deal of uh, disinformation, misinformation, just general confusion about liens versus levies. So that my hope was by going through this next series, we can clear it up. Because taxes generally aren't as problematic for most people as an actual seizure by the government of your money. But it has its own complexities and it can actually cause a great deal of problems depending on who you are. But let's start first with what is a tax lien? Again, it's a claim against your property similar to a mortgage or a car loan. That means if, for example, like a mortgage, it is not ownership of your property by the bank. It's just if you do not pay your mortgage, now the bank can foreclose on your property. Car loan similar, it's a security interest. So if you don't pay your car loan, they can repossess your car. A tax lien is like that. It's not exactly the same because the IRS has powers most mortgage companies and car loan companies don't have, but it works in a similar fashion. So remember, it's not a seizure of your assets. A tax levy seizes your assets, but the IRS could, if it needs to, foreclose on its tax lien, but that's rarely used. So many people, when they're talking about tax liens, the fear is that the IRS is going to foreclose and take their home. Very rarely does that happen. Less than, I think, only several hundred uh, actual liens were foreclosed in last year. I think it may be like 100 and something. So it's not many. You don't want to be one that fits into that category, but out of a nation of 330 million people, that's not a lot. You will, however, face levies much more quickly. But so let's just kind of go into this a little bit more. So a tax levy, that asset seizure, that's like a wage garnishment, a bank levy, seizure of Social Security benefits. A tax lien, you still own it. But here's the thing. When you sell or transfer the property, you have to deal with that lien. Oftentimes, we see this when real estate is sold. I would say that's the most common time we have to deal with the tax lien. Because once you sell the property, now the government has its hand out to be paid. If you think, well, I'm just going to transfer it rather than selling it so I don't have to fork over money to the IRS, the lien carries over to the new owners. So oftentimes, many people will not take a transfer of a property with a tax lien because now they're going to be on the hook for it. You're still on the hook, but now they are too if they later sell that property. All right. Now, we're going to be talking in future episodes about more details of liens. But I have to at least set the table by saying, look, many people believe that filing in the county registry of deeds, that's what happens here in Maine. I think most states are similar, though they may call it something different. This is where deeds of real estate transfers are recorded in every state. The IRS files a notice of federal tax lien in that registry of deeds to let other parties know of its lien. That gives it priority over other creditors, and that's why it's done. Generally, the IRS won't do it for less than $10,000, but it could do it for any amount if it wanted to. But that doesn't mean the IRS doesn't have a claim against the property if a notice is not filed because of the silent tax lien. So when the IRS sends you a notice saying, hey, you owe us money and you do not pay it, by law, a silent tax lien arises automatically. IRS doesn't have to do anything more. If you transfer that property or you sell that property, the IRS may have the right to claim some of those proceeds or have the ability upon a future sale of the property, if it's transferred, to get paid. So just keep in mind, notice of federal tax lien, the thing you see in the registry of deeds or wherever your county deeds are recorded, that just notifies third parties. The silent lien, which impacts you, arises once you fail to pay your taxes after you've been notified by the IRS. And we're going to be talking in the next episode about why this distinction is important. But just be aware, you don't pay, lien arises. All right, so the next post, we're going to be talking about, what is impacted by a tax lien? What property do you own? Or what property that you either will acquire in the future or property you transfer to others, how that lien will impact it. How does a notice of federal tax lien impact you directly? Now, we talked about there's a difference between the silent lien and the notice of federal tax lien, but that notice of federal tax lien has its own problems that come with it. And finally, we're going to be talking about not just the impact of a lien on you, we're going to be talking about how it impacts other people if you transfer it or sell it. So with that, thank you so much for listening. If you have any questions about how to deal with an IRS tax lien, certainly you reach out to us. I got my information right here. You can either email us or call us, or if you're so inclined, you could even send us a letter. But happy to talk to you, see if we can't help you out. And with that, have a wonderful day.